holding Tesla stock, you are likely a kid in a candy store right now, as it is up 524% over the last year. And many of you might be aware I hold 10 shares in Tesla that I'm currently up 354% on. And now I'm going to cause some controversy in that comment section below, because anytime you talk about shorting, hating, or selling Tesla stock, there's always a troll around the corner to offer some insightful opinions. But in this video, I'm going to break down when I plan on selling my Tesla shares, how many I'm going to sell, and what I actually plan on doing with that capital moving forward. And in the clarity of my transparency, to help the channel out, could you guys just hit that like button, or heck, even hit the dislike button? I think it helps with the algorithm either way. But nonetheless, let's jump. Welcome back, my passive income investors alike. Now, Tesla as a brand represents the imagination of all of us in the future we want to see around the electric vehicle, carbon emission, self-driving space. And the fact that Tesla is associated with SpaceX, I think, has really been driving the stock up to the bloody moon, which is starting to resemble what I'm thinking is an electric vehicle bubble here. Now, don't get me wrong, I am a long-term Tesla bull. There is no way I could ever part with my entire Tesla shares. And I think at the end of this video, you guys are going to be pretty shocked to see what I actually plan on spending that capital on, because it's really not that much farther than a rock throw away from the Tesla position I am holding now here, folks. But let me break down some information for you really quick, and the reason that I think this is going to be a bubble. Now, Nikola, after its IPO, ran up to a $30 billion valuation. Now, I made a video a few days ago breaking down some of the math behind it, because essentially Nikola plans on making about $170,000 over the lifetime of one of their tractor trailers. And if we divided that out by a $20 billion market cap, which was kind of the general middle of what the company was trading for, they would have to sell roughly 115,000 vehicles. I highly suggest you guys go watch that video. I found it to be very analytically interesting, because this is a company that has no manufacturing yet and doesn't plan on producing vehicles until about 2023, meaning that they're actually pricing in most of their future sales into what you're currently paying for the stock. We're starting to see this with companies like NIO. We've been seeing it in companies like Workhorse here. And the only thing that I can kind of compare to this is past trends. And the last past big hype trend that we had was in the MJ space, guys, in which stocks went absolutely parabolic, because we're looking at the HMMJ, which is the Horizon Medical I don't want to say the word, because, you know, the YouTube algorithm and stuff. You know what I'm talking about. That MJ stuff. You know what I'm talking about here? We all need to chill out a little bit after these stocks have run. Now, the reason I'm comparing this to the MJ sector, and it isn't really comparable. I mean, it's in a whole different market altogether. But where things kind of merge together is in how everybody and their grandmother is literally talking about it right now. In fact, my girlfriend's like, why don't I own Tesla stock? My mom, I should own some Tesla stock. And the thing that scares me, guys, everybody wants to get into this, because that usually is a really good sign that stocks are getting way overvalued. And usually at some point in the future, they actually have to prove their bottom line earnings. And when you have people like Kathy Wood from ARK Invest pumping the stock up, saying it could be worth $14,000 a share based off self-driving, based off the battery technology, it sounds really, it gives you really good vibes and that kind of butterfly feeling in your stomach. The only problem is self-driving isn't proven. There isn't a Tesla taxi self-driving network. The battery technology hasn't become super explosive yet, and all these other car manufacturers are partnering with their own battery manufacturers. For Tesla's stock price to actually start making sense here, folks, and to give you kind of a better example, do you remember Apple in the .com bubble? Probably not, because when you look up Apple stock, you can't even see the .com bubble back in the early 2000s. But if I try and run this little line over, we can see that, you know, Apple ran up 200 to 300%, followed by a wicked decline that it didn't recover from for another 5-6 years until the company could start proving its revenue. And as much as people love the idea of Tesla, guys, at the end of the day, I'm usually a value investor looking for dividend paying companies. And when we look at the math behind Tesla right now, I mean, they have so much work to do over the next 5 to 10 years before they're even going to meet the earnings expectations for the current market cap. And let me show you what I mean by this. I'm going to compare Tesla to the same company everyone likes to compare it to, which is Toyota, guys. And if we go take a look at the 2019 revenues here, you can see Tesla did $24 billion in revenue and they lost about $862 million because obviously right now Tesla's not a company just like Amazon that does not want to show any positive earnings due to the fact that they just want to reinvest the money, scale it, get all the manufacturing built out globally, hopefully getting to the point where they're just going to be rolling vehicles off the factory line. So taking a look at the same analytical data for 2019 for Toyota, we can see that their revenue was $30 trillion in yen and their bottom line earnings were 1.8 trillion, guys. So let's just focus on those bottom line earnings of 1.8 trillion yen. I kind of rounded it up to 2 trillion because apparently that's what they're expecting here in 2020. But nonetheless, folks, if we actually take 2 trillion yen, convert it to USDs, it's the equivalent of about 18 to 19 billion dollars in bottom line earnings. So the fact that they're doing almost 20 billion in actual bottom line earnings is literally the equivalent of currently what Tesla is just making in revenue. Let's actually go and take a look at Toyota's stock without causing too much confusion here, folks. We can see that right now the market capitalization is $208 billion with about 20 billion in bottom line earnings. So keep that in mind when you're looking at Tesla with almost a $300 billion market cap here, folks, and just think about the vast reach and the brand that is Toyota. And I'm not saying go and buy Toyota stock. I do not like owning any of the ICE vehicles. In fact, I never owned a vehicle maker until Tesla basically came online. Now, don't get me wrong. I'm not saying that the stock is going to drop 50%. Heck, the stock could just keep going up and maybe it's not even a bubble. And the fact that people are so gung-ho about this electric vehicle future that there might just be continual buying until the stock becomes worth, $500 billion and, goes up to maybe 2,000 or 3,000 a share. And I'm not going to be selling it right now because there are two major catalysts about to happen, which is earnings, where Tesla's trying to get listed on the S&P 500. So if they show positive earnings, they'll have 4 quarters of straight positive earnings, which will allow them to meet the conditions that can get them listed on the S&P 500, which now gives them access to basically things like Vanguard and BlackRock investor money, because ETFs only invest in the top S&P 500 stocks, and actually the majority of those ETFs are weighted in the top 10 companies. I mean, the value that could add to the share price could be pretty absurd. Now, the second catalyst is battery day. And we all know that these electric vehicles are highly driven by the advancements in battery technology. So we're going to be sitting on our hands just seeing if Tesla has something that they've been kind of itching a little bit about as Elon hints toward things. And we're all kind of expecting like this 1,000,000-mile battery. So I'm going to be waiting probably for the next couple months just to see how this kind of pans out before I liquidate any of my shares. Now, how many shares do I actually plan on selling out of Tesla stock? Well, first of all, guys, I have about $16,000 to $17,000 in this position at this very moment. That's USDs, by the way. I live in Canada. We work through the Canadian currency. If we take the time and I just show you guys that we convert 16,000 USD to CAD, we're looking at roughly $21,000 here, folks. And I am a dividend value investor looking for spaces in the market that people just don't want to touch right now. And those spaces right now are honestly real estate investment trusts and financials. The financial systems aren't going anywhere. And for right now, while their revenues are getting hurt, people don't want anything to do with them. They're trading at insane valuations against their actual earnings, even in the current economic situation. So I would like to start focusing my money more toward dividend plays that might actually have a likely return over the next couple of years while also getting me a really high yield. But that is not actually what I'm going to be doing with all of that Tesla money, because I only ever plan on selling maybe 3 to 5 shares to start scaling the position down to a more reasonable level for the risk tolerance that I have. And I will be taking those shares, and in fact, I will actually be purchasing also some ARK ETF, ticker symbol ARKK. The legend herself, Cathie Wood, has been one of the primary reasons Tesla's been shooting up so much, because she's been a bull on this stock for over, I think, 3 or 4 years now. In fact, she was on CNBC when Tesla dropped down below the $200 price range, trying to tell people that Tesla is going to be the future, and she kind of really took those bears head on. Now, you do not buy ETFs for exposures to companies like Tesla. You buy them for the management team. And Cathie Wood actually trades in and out of Tesla to try and keep it at a 10% weighting. But I also enjoy many of the other companies they hold. The problem is I don't understand them that well, and I haven't done enough due diligence to start diversifying a portfolio of high-risk investments like Cathie has done with ARK Invest. I'm still going to be able to have exposure to Tesla to also give me exposure to some of the most technologically advanced companies that are like likely to explode into the future here, guys. Because if you are sitting on Tesla stock right now, guys, from a fundamental standpoint, you have to wake up as a real investor and realize that, again, when everybody and their grandmother gets up and starts flaunting about how well they're doing with the company, also leading every new, electric vehicle company on its IPO to explode into absolutely absurd highs. Elon Musk is an incredible dude, and I would never bet against him in shorting the stock, which is why I plan on keeping some shares over the extended long term, probably for the next decade, if anything here, guys. But in the macro aspect of things, this gain is absolutely absurd. If I invested this money into a dividend paying stock that pays 4 or 5% on the Canadian dollar aspect of things, that could generate me an extra $1,000 annually in income. And I want to get to a place of financial independence so I can retire early. And that is why I tend to hold some of these higher growth stocks, because in the short term, obviously I would have never made $12,000, $15,000 under a year off any of the dividend paying stocks that I hold. So I am taking a breath. I am not going to be cocky about Tesla. I think I captured something incredible here, but it's important to keep my risk tolerance at a level where it makes sense. And the fact that I have a 40% exposure rating to technology companies being Facebook, Tesla, Microsoft, and Apple, I really don't need this much greater exposure to tech. So I would really like to perhaps, even buy a little bit more of J&J, maybe some Pepsi stock, and keep my dividends growing. When the bad times come around, which they are likely to happen with this parabolic type movements, I'm going to be able to ride it out knowing I'm still collecting dividends that I could actually reinvest into Tesla if it does such a heavy pullback. And in light of all of this, I would love to know what you guys think in that comment section below. I'm a very slow, cautious investor. Like I said, I'll be holding on to these shares probably for another couple months until we get through earnings and battery day, just to see where the stock goes. But if it does another parabolic moonshoot over 1,700 a share, I'm gonna have to start pulling back the position. But again, I'd love to know what you guys think in that comment section below, and I hope you enjoyed this video. But stay cool, most of all, stay awesome, and I look forward to chatting to you guys tomorrow.